And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to you all, my fine futures friends and family. It's time for the market prep, Tuesday, January the 24th. My name is John Hoagland. Thanks, as always, for trusting me with your time. Our focus is always context, risk management, and patience. If you're already in the markets, hopefully you've got things going your way. It's been a busy morning around here already this morning. We've got a bunch of workmen working on the transformer behind the house, so I can't guarantee I'm going to be able to maintain electrical power through this whole thing. I'm hoping that they're not going to be shutting it off. They've told me that they're not going to be, but we've got a bunch of workmen walking around, and it's driving Lacey crazy. So she may be barking a little bit during this morning's prep. We'll just have to kind of deal with that. Lacey, it's okay, girl. It's all right. It's all right. They're not going to come get us. They're here to help. So this morning, as far as economic numbers are concerned, at 8:45, this morning, Central Time, the PMI composite, that's manufacturing PMI and services PMI, due out. We will be in Make Hoag Money during that, so we'll have the opportunity to see together if there's any market reaction to that. But again, most of what people are focusing on as far as economic numbers are concerned is Thursday with the GDP and, durable goods orders and the GDP coming out. Most of our economic important numbers coming out on Thursday this week. So a lot of folks can kind of posturing and hedging for that in most of these markets. We've got the FOMC meeting next week, which is already, of course, a focus for our longer time frame traders. So again, a lot of hedging, a lot of posturing for Thursday and for next Wednesday already in the markets. U.S. stocks largely consolidated overnight last night, looking like we're going to open a little bit lower this morning, but still well within range and value from yesterday's session. The economic data earnings headlined by Microsoft after the close. We've already seen Johnson & Johnson with mixed results. Verizon beating on both. Raytheon mixed. GE mixed. Lockheed Martin, I didn't see if that has come out already. But the early earnings already out and affecting the markets possibly. But again, a lot of focus at the end of the day on Microsoft, of course. The crude price has consolidated on rumors that OPEC will be maintaining current production as unchanged at its February meeting. So the crude trader is waiting for the API this afternoon and the EIA tomorrow, which has, for the last two releases, surprised with some pretty decent boosts in crude stock here in the U.S. So you crude traders will be looking for opportunities as the day goes on. I think it's going to be a little bit of a patience type day in many of these markets. And I'm trying to remember to keep my expectations reasonable, which wasn't necessarily the right thing to do if you were long the S&Ps or long the NASDAQ or the Dow yesterday. Once this market took off to the upside, it was a pretty decent move on the upside move there. So as far as the VIX is concerned, it's exactly where it was at this time yesterday, right at 20. Dollar index down slightly at 102, and the yield on the 10-year up slightly at 3.5%. Make sure you hit that lucky like button this morning. Sharing, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel. You get notified when we do go live. We are going to be presenting the Coach's Playbook today. And I believe the topic is going to be, if you want consistency from the market, you have to bring consistency to the market in homework, in process, and in strategy and hypothesis. So we are looking for a good day today. We do have Make Hogue Money right after the session today. I'm going to put a link in for the 2-day webinar on basics of market profile and auction and the auction process. That is tomorrow and Wednesday. Or tomorrow and Thursday, I should say. Tomorrow, instead of the group coaching session, that will be session 1 of that webinar. And then, of course, the follow-up on Thursday at 12:30 p.m. Central. Putting now, that link is what I just put into the chat. Now the second link is going to be to get into the Make Hogue Money session on the Zoom side, so you'll be able to vote, or looking forward to seeing who's around, who wants to speak, who's going to come up with the right ideas to make me some money. So far, so good. We haven't lost power. Lacey's calmed down a little bit. They must be now in the backyard, which she hasn't figured out that that's where they are just yet. So we'll see if we can get through all of this morning with all of these other things going on. We're going to jump into the charts quickly here this morning so we can get to Make Hogue Money on time. Here's the daily in the S&Ps. One note for you nat gas traders: you should have moved to the March contract this morning. We'll see what's happening there shortly. So in the E-mini S&Ps, we did add 25,000 in open interest on this upside move. Friday's move was a loss of what was it, about 29,000 contract loss on Friday. Short covering, trapped shorts. We continued the move to the upside yesterday, up against a kind of important area here. Now, this is not that long-term trend line. This is just off of this swing high to here and to here. Take a look at the continuation chart, which is, I think, an important thing to be checking. So this trend line is off the all-time high. We've got 1, 2, 3, 4 points of contact off that. This push above here was a CPI. I'm calling that kind of a market anomaly, or an oddity, if you will, in the market. So we struggled for a number of days before this pullback. Now we're holding above it. We've closed above that trend line. Not only that, we have the 200 session below price. We've now crossed the 50 session over the 200 session moving average. It's something that a lot of people call the death cross in the other direction. I'm not quite sure what we call it in the direction that we are heading to the upside, but it's structurally a good thing to see something like that. So be back to the daily, the 200 session moving average, you got to kind of squish things around to get it to where it should be, is currently right around our low, right around where we are right now. So on the daily chart, it doesn't have as much information, right? So we're seeing the daily chart 200 session a little bit higher than the continuation chart, but still kind of up against where we are right now. So on the continuation chart, it looks a little bit friendlier than it does here on the daily chart. So again, open interest increased yesterday. I see some folks discussing that in the chat, and that's a good thing if it's long time frame. Now, one of the questions that I had yesterday was, well, let's go through this here. Last week's high seems to be pivotal. We did close just above it, but it seems like we're having trouble. We had the 200 SMA above price on the continuation chart, at price in the daily chart here. Is this market now going to await for data? It seems to be struggling to hold above last week's high. It is largely still in a range-bound area here. Last night, that last week's high was pretty pivotal and magnetic. Take a look at the 30-minute chart here. So I know we're probably thinking, well, now we've got some shorts coming into this market before the open. We have two extremely emotional days to the upside. This was an emotional day to the downside. We've repaired all of that. Now we've got potential repair to the downside. We've got all of this emotion, all of this toothiness, all of this that kind of lays out there and beckons price to come back and recheck those levels. Now, here's our settlement price. We did settle above last week's high. Weekly kickoff high still looms above. If we're showing that we're unable to hold this level, a pullback would probably even be healthy for an upside move. Sometimes the market has to break to continue to rally. There's so much speculation out there that this market is going to fall apart, and is it going to? Who knows? I'm going to try and trade what I'm seeing today. Yesterday we saw that we had a gap, we closed the gap. The market was what did I say yesterday? That the S&Ps seemed like we had trapped shorts on Friday. One of the things that I'm looking at, that I'm finally trying to get to here, was the delta. Okay, the delta on Friday was 6,000 positive. Yesterday, 6,000 positive. So typically on a day when I'm looking for after a big move to the upside, I'm looking for an increase in open interest on negative delta. That tells me that longer time frame buyers have gotten short time frame traders shorter. I didn't see that yesterday. We had positive delta. Doesn't mean that the longer time frame wasn't present yesterday. They were just using a different type of order to execute what they were doing. So for 2 straight days, Friday and yesterday, we've had one time framing basic activity overall. It's been an emotional upside move. Emotional upside moves tend to kind of repair themselves, and that's what I'm kind of thinking, especially now that we've kind of rejected value from yesterday and we're looking lower. To me, this complicates the trading day today. We all know that this market is awaiting data. If it's not the PMI numbers today, it's the GDP on Thursday. Are we going to be looking for any huge breakouts? Probably not, even though the charts are saying it is possible. I mean, when we look at this continuation chart, a move back to this low, to this line right here, could actually be something that I would be looking at. So right around 4,039.95, that area there is kind of a wishing order. So back down to here, into this area here, because we had buying in on Friday. We continued that buying yesterday. If we get down here, it might be an interesting spot for us. That would help us repair the day from yesterday, which was a P-shaped short covering profile shape. Let's take a look at the TPO chart here. Okay. Okay. So all of this toothiness and repair, it appears to be attracting price right now. If traders are looking at that, they're going to bring price down to that level. Not looking for any huge breakouts, although the breakout is possible. Again, coming back down to that trend line. We had a lot of excess at the low yesterday, a lot of excess at the low on Friday, excess low here. P-shaped with continuation, P-shaped short covering, increase in open interest says, hey, maybe there's more to this. All right, so opening between the point of control from yesterday and the point of control from Friday leads me to believe that repair is entirely possible. Yesterday we had a normal variation extreme day. Price pushed higher and put the point of control in the upper part of the daily profile. We attracted some new buyers yesterday. We know that from open interest. If those new buyers are longer time frame, they're going to fight to hold those levels. If those new buyers were short time frame, we could certainly see a pullback to adjust that short time frame inventory. Not seeing with Delta that it was shorter time frame traders accumulating those longs yesterday. Keep that in mind. It's going to be, I think it's a complicated day in the equities today. Try and make sure you're using your A game today. Your knowledgeable trader is in the forefront of your mind. Crude oil. Apparently yesterday the White House, or at least the Energy Secretary, says they're willing to pay $80 to replenish the Strategic Petroleum Reserve. They've moved the floor up. Down here they said, yeah, we're going to pay $70 to refill the Strategic Petroleum Reserve. They tipped their hand. Why do they do that? I don't understand. Don't tell us. Just do it. Although it was nice of them, because anybody who picked those longs down there really had a nice move to the upside. So they've upped their level that they are going to pay. Open interest increased yesterday by 27,000. It increases energy, but as momentum seems to be falling. OPEC now again has said they're going to stand pat on production. We're waiting for API and EIA. API today at 3:30. Take a look at the 30-minute chart here. Okay, so we've got no real overnight inventory here. We're inside value a little while ago, which says stay patient. We're still inside range. Last week's high, the upper extreme of the area of balance that we see on this 30-minute chart. Upper extreme, lower extreme. Anything in the middle is probably short time frame, especially awaiting the EIA and the API this afternoon. Take a look at the 30-minute chart. The TPO chart, I should say, high of the initial balance, high of the day. The high of the day, weak. The high, according to yesterday and Wednesday, also weak. Exactness exudes weakness over time. We almost put in a late spike to the downside, which we did not. We've opened above that tail at the bottom yesterday. So, are we looking for opportunities for longs? We very well might be. If we can't hold the low from yesterday, we could certainly repair some of Friday's session. But this week high and the week high against Wednesday's high, certainly going to be something I'll be focusing on. What these profiles are saying is what we did yesterday is an unfinished upside auction. We have excess. We don't have excess at the high. Take a look at the NASDAQ now. I still got it on the profile. So the NASDAQ has been presenting as the stronger between the S&P and the NASDAQ. We've been talking about that. It didn't pull back as deeply. It is much closer to a real check of the weekly kickoff high here. We've got the 200 session moving average, which capped off the upside move yesterday. We did add 2,100 in open interest. Volume was pretty good, actually, for an upside move here in the S&Ps and the NASDAQ. Open interest higher, volume a little bit higher. I've got a little bit of a meh with that right now, but take a look at the continuation chart here. It really capped off yesterday's activity. But again, this trend line is off the all-time high, and we've broken out above it, and we're holding above it. One of the auction features that I look for is time. Is the market accepting higher pricing through time? So far, it is probably better in the NASDAQ than in the S&Ps. Here's the 30-minute chart. Overnight inventory a little bit to the short side. We're not as far away from value as we were in the S&Ps. We've got some time here before the open, but we could certainly fall into repair lower. This area down here in the NASDAQ is similar to what I'd be looking for a pullback in the S&Ps. If we can't hold here, the naked point of control down here in the NASDAQ would certainly be something I would be interested in seeing the market getting to. Again, excess. Excess. Finished downside auctions, not that finished upside auction on Friday. We've got a finished upside auction in the NASDAQ and in the S&Ps. So as we get closer to some of this important information, the more I think we're going to fall into range-bound activity. We don't know what's going to happen, of course. ACH, anything can happen. Gold. So another 6,200 additional contracts created yesterday. We added open interest 6,200. Open interest is higher, still indicating new buyers in this market. There's potential upside continuation above last week's high. We've tested to it. We looked at it yesterday. We tested through it and rejected it in the overnight. Got to keep your eyes on the U.S. dollar here. It is showing some continued weakness, and we had a little bit better volume yesterday. Here's the 30-minute chart. Overnight inventory was to the long side. It has now been reconciled. We've opened with a gap. If we can't close the gap, guess what? We're looking for the market to go in the direction of the gap, which would be to the long side. One last thing, maybe one of the more important nuances today, we closed with a late spike. The late spike is when price leaves previous balance at the end of the day and doesn't have time to accept through the regular trading hour session. Settlement is 1928.60. Well, we've had an open above the late spike. That's the highest probability of acceptance of higher pricing. We are kind of up against last week's high, which has been showing resistance. Take a look at the TPO chart here. So we still have a gap. Here's the late spike. The base of the late spike is here. 1927.60. 1927.70 actually. So as long as we hold above that late spike, I'm looking for opportunities to buy this market when it shows weakness. Right now, we're above a gap. We're above the late spike, and so far, we've been unable to close the gap. Doesn't mean we're not going to be able to. Doesn't mean we're not going to be able to come back and test the base of the late spike. But upon acceptance below the late spike, coming back into value, we could, see the value area special situation play come into play. I don't think there's a high probability of that. And that said, the market loves to make a liar out of me. Right now, I've got Feb here. Hang on just a second. April will be the contract that we go to, and we're still higher in volume in Feb, Vince. So we've got February still. It's about a week now until rollover, until we switch. All right. So if we can't close this gap, I'm going to be looking for opportunities to look at this market to the upside. We've got a little bit of excess at the high here. It's a little bit unnerving for longs. Stay patient. Euro. Test of weekly kickoff high yesterday. Rejected. We added 6,300 in open interest yesterday in the euro. Bets were placed against the weekly kickoff high. If there was longer time frame participation at weekly kickoff high, they were sellers. Now we're seeing rejection of last week's high today. Got to keep your eye on the dollar. Here's the 30-minute chart. Here's our test above last week's high rejected. Basically a rangy type day, another test of last week's high rejected. The market doesn't have any overnight inventory for us to work with here. We're range bound still until we can find acceptance above last week's high. This is the range extreme. Last week's low, last week's high. Let's take a look at the TPO chart now. So we have a poor low yesterday. This is a normal variation day. The low of the session is the low of the initial balance. So we have an initial balance extreme yesterday. I think 6 out of 7 of these markets, or 5 out of 7 of these markets, did that yesterday. One extreme of the regular trading hour session puts in one extreme of the initial balance. We looked above it. We didn't really do that well on the auction above that. We just kind of rotated the better part of the day yesterday, which puts in a prominent point of control that we're already at. But what this tells me is this market is ready to start probing to look for new levels to facilitate trade. There's some energy in this. Here's the TPO chart. Oh, here it is. We're on it. Patient. I mean, we're in range and in value from yesterday in the euro. I have not been focusing that much on the euro as far as my activities are concerned. The 10-year, we lost 15,000 in open interest yesterday. I think there's a lot of traders that are liquidating positions if they're speculators, and they're hedging if they're hedgers for Thursday and next Wednesday, the FOMC meeting. Look at how much volume's been dropping, although we are getting relatively close to rollover for the treasuries here. We've got upside structure still intact, at least for now. That open interest loss to me is probably some positioning for the FOMC meeting in Thursday. Take a look at the 30-minute chart here. In basically yesterday's range, not in a hurry to do anything. Is this a bull flag? Could it be? We've had a few of them. Bull flag, another bull flag, and the overlap in these ranges is saying that the upside momentum is falling off, but a little higher rates, and we can see those fall off even more. Here's the TPO chart. So basically matching yesterday's high. That's not a very strong high. We have excess at the low from yesterday. Normal variation, extreme day with a point of control in the lower half of the profile from yesterday. Patience. I mean, we're sitting in value. I don't really have too much that I want to do here in the 10-year at this time. Take a brief look here at Nat Gas. So our low is holding the Nat Gas. We had volume and open interest lower. Well, open interest dropped yesterday, but again, you got to remember it's in rollover. This is now the March contract. So we found support at weekly kickoff low and the last week's low yesterday. We did do a 30-minute here. So here's our rejection, pretty stiff. We do have a late spike. Okay, we've opened above the late spike here. And seem to be rejecting higher pricing for now. The base of the late spike here, $3.17. This is a pretty pivotal area here. We start to show acceptance inside value, we could turn value and head to the other side of it. I'm looking for rejection because we did open in the late spike. This will be something interesting to check later on for the market reflection to see how this market treated this level. Even if you don't trade it, there are opportunities to learn just by kind of setting something up in a market that you don't actually always trade, and then take a look at see how the market finishes the day after checking it out early on. So we're going to do that, I think, in the market reflection today, and I'm looking forward to seeing you there. So Jimmy Decker, if I created a business teaching market profile trading, would I owe the royalties to the creator of the market profile strategy? I was introduced in 1963. Jimmy, the Chicago Board of Trade owns the trademark to market profile. The creator of it donated it to the Chicago Board of Trade. Now, I don't know if all of the educators and people who have written books about market profile have had to pay the Chicago Board of Trade to use that information. I would check with the Chicago Board of Trade. So I didn't say good morning to everybody this morning. I apologize. Rooster's first in the room. He wins the prize. Talking about the open interest yesterday. Kind of running short on time here, and I just want to thank you all for joining me. I see Theo's here. I saw my good friend Kevin Laffey's here. I haven't seen you for a while. You are all very important to me. I want to make sure you all know that. And Sarah, good morning. My brother Tom is with us. Our brother Randolph is in Mexico this week. He's hanging out with Winthorpe. And so I'm going to just say good morning to everybody. Again, thank you all for joining me, for trusting me with your time. Didn't get the chance to kind of look through everything today and say good morning to everybody, and I apologize for that. It's so important to me that you all know that I care about you, and we love you. We're looking forward to your success. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. We will look forward to seeing you in just a few minutes here in Make Hogue Money. I'll get that running as quickly as I can. And if I don't see you, trade well today. Get out there and profit, protect capital, have a great trading day. The goal is to be here tomorrow and with a little bit more than you had today. Get out there, trade well.